Let me kind of pick up where Senator McCaskill left off there. This is complex, and it has to do with how do you allocate income, what kind of transfer price is an appropriate price. I did notice that your U.S. sales are about 39% of your total sales. International is about 61%. So U.S. sales about 39%, and you had income about 35% in the U.S. International sales 61%, and about 65% of income. Can you just explain that? I mean, that's pretty close. I mean, if I were taking a look at that, you're getting pretty darn close, I would think, to pretty proper allocation between sales and income. Can you just explain that disparity?
Sure, Senator. And I'll make some comments, then pass it to Peter. You may be able to add something. Generally, Apple's Macintosh business is a larger percentage of its sales in the U.S. than internationally. As we launched the iPhone became a larger percentage of our international business than it did a part of our U.S. business, because we had this nice base of Macintosh sales in the U.S. The iPhone, generally speaking, has higher gross margins than our Macintosh business. So it's logical that the international business generally would carry higher margins than our domestic business. And Peter may be able to add something to this.
But basically, to summarize that, you have a more profitable product mix internationally than you have in the U.S.
That's correct.
That pretty well explains that difference?
It does.
I was talking earlier about who's the beneficiaries of your very good tax rates overseas. I would point out, I think this is true, that if we ever do tax reform, if we ever do incentivize companies to start bringing some of that money back home, the way current tax law is written is you get a deduction for foreign taxes paid, correct? Mr. Bullock?
That's correct. It's actually a credit, dollar-for-dollar credit to the extent you pay foreign taxes.
So as a result, if now Apple has a lot more money that when you repatriate it, we'll be able to tax more of it, correct? So the U.S. government, you could argue, will be a net beneficiary if we ever get our tax house in order.
To the extent of repatriation in one form or another, if it's taxable, yes, that would yield more U.S. tax.
Mr. Bullock, I would imagine you probably know this better than anybody. Because you're a large corporation, my guess is you have full-time IRS agents stationed in your operation basically doing a full-time audit nonstop. Is that pretty accurate?
That's correct. We're under audit in a number of jurisdictions around the world, including the U.S., not unlike many of our multinational peers.
And they're looking at all this corporate structure, they're looking at all the transfer prices, and they're basically giving you the nod saying that you're following tax law.
They look at it in detail, yes. Okay.
Mr. Cook, again, talking about who are the beneficiaries of your, not only your excellent products, but also just your low tax rates and corporate profit, that would be shareholders. Can you describe your shareholders, I mean, in general?
I think Peter can probably add more to this, but generally Apple is very widely owned because it's a part of the underlying indexes in the stock market, and a number of mutual funds own us in addition to pension funds. Peter?
Yes, Senator. Roughly our top 50 shareholders own about half the company, and these include public employee retirement systems, mutual funds such as Fidelity or PIMCO or BlackRock, where people are saving for their retirements, and we also have individual retail shareholders as well.
So again, even the top 50% is widely dispersed, and those are large funds that also have very diverse shareholder base in those funds.
Absolutely.
So again, those folks benefit from the fact that Apple is able to retain more of its profit by not paying out taxes to foreign governments.
Yes, and they also receive our dividends.
In addition to U.S. and state income taxes, what other taxes in the U.S. does Apple basically generate? What could you almost take credit for?
Last year, we paid more than $325 million in federal employment taxes that Apple paid, in addition to our employees. And we've paid, over the last couple of years, I think nearly $100 million to state and local governments and property taxes and various other fees. And I believe last year we collected and remitted and paid approximately $1.5 billion in sales tax.
So that's getting close to about $2 billion in total. Mr. Bullock.
Just to clarify that a little bit, it was a little over $1.3 billion. in
Okay.
sales and use tax.
When we were talking about transfer pricing and allocation of income, you face the same dilemma between states, don't you? In terms of which state claims how much income when you're paying those state income taxes?
Well, the income that the company generates in the U.S., the approximate 40% that you alluded to earlier of our total global profits, which is relatively commensurate with our U.S. customer base, that income does get apportioned around and divvied up amongst the states under a slightly different system, but it does get allocated out to the states.
So can you just tell me what is the basis of that allocation, and how would that differ really from trying to allocate income between different countries?
Well, that too varies by state. Some states apportion based on relative sales, sales to customers in that state over total sales domestically. Some states use a multi-factor test. They may look to sales, property, and payroll.
Do you end up having to negotiate between the states in terms of who gets to claim what percentage of your income? Do you end up paying more? Do you have more of your income allocated to pay state income tax than you actually, in other words, more than 100%?
It's not over 100%, but it is approximately 100%. So in our fact pattern, it's not double taxed, which would be the case if more than 100% of the income was apportioned, but it does approximate 100%.
But again, that's a similar type of problem you have trying to allocate income between different countries, isn't it?
If you had different states apportion in different ways, yes.
Can you tell me a little bit about the taxes you pay to foreign countries? Is that income tax? Are those sales taxes? Is it property taxes? Is it a combination of all those? And can you give me some sort of relative amount?
Well, there's a combination. Last year, in fiscal 12, the company paid a little over $900 million in international income taxes around the world. We're projecting that number to be larger this year. And that number is significantly larger than it was a few years ago. In addition to that, I don't have the statistics available, but I would imagine similar to in the U.S., there are employer contributions for payroll tax for employees outside of the United States, and there's a considerable amount of VAT and GST that gets collected and remitted by the company to various countries around the world.
Of your total worldwide employment, how much is based in the U.S., how much is based overseas?
About 50,000 of our 75,000 employees are here in the United States.
So even though 60% of your sales are overseas, what percentage is that? It's almost two-thirds of
Yes.
your employment is here in the States.
And that's also influenced by our retail stores. Of our approximately a little over 400 retail stores, about 260 of them are here, and that influences it.
Okay. Thank you for your testimony, and thank you, Mr. Chairman.
Thank you very much, Senator Johnson. Senator